So I think I just have 30 minutes to spend, and then we'll call it a day. If I have to teach this topic I want to handle today, it shouldn't be less than 6 hours, minimum 6 hours. So compressing it into 30 minutes is just like giving you an overview so that you go into deep research and make findings on how to properly, handle the stuff. So now, when all of us started trading, we were taught that there are three types of analysis in the market. We're taught that we have a fundamental analysis, okay? We have technical analysis, and we have a sentiment analysis. Some people call sentiment analysis, but majorly we have fundamental and technical analysis. Now, the way these things is designed is in such a way that fundamental analysis gives you the direction of the market, the direction of the market, and then the technical analysis help you to time your participation, time your what? Your participation or your entry. This is to time it for you. Technical is to time it for you. But the direction of the market is not given by technical, it's given by fundamental. So if that is the case, the need for us to now understand what this fundamental analysis is has become imperative in forex markets. Recall that most of us traders, what we call fundamental analysis is not. We just look at some indicators, some macroeconomic indicators that are released in forex factory, and we call it what? Fundamental. This is where we get it wrong. We get it all wrong. When they release CPI, they release GDP, they release your NFP. This is what you call fundamental. No, it is part of fundamental, but it is not holistic. It is not all we call fundamental. They are just fundamentals indicators. They are not the real fundamental analysis we talk about. But because the people that started teaching people how to trade forex, this is the one they know. And that is the one they bring to YouTube and teach people and call it fundamental analysis. And that is what people push around as fundamental analysis today. And it is not true. They are just fundamental macroeconomics indicators that are used for the real fundamental analysis. So if you go to NTFX trend mastery course, you will see that there I've had the first part of fundamental analysis that had to do with interpretation of these numbers, CPI, GDP, NFP, and so on, interest rate, and so on and so forth. That is part one. All right. So part two will have to deal with the real fundamental analysis. And that is what is used. You go to the bank, go to HSBC, go to Barclays Bank, go to any bank you can think of anywhere in the world. That is how they do their fundamental analysis. But you cannot do it without making use of those macroeconomics indicators. Okay? So now, what are those ways you can, fundamentally analyze the market to get its directions? There are three basic ways. Okay, one, there's what we call carry, or some people say carry trade. All right. Two, there is what is called yield. And then three, there's what is called currency asset valuation. Currency asset valuation. And the popular method of handling currency asset valuation is what the use of what we call purchasing power parity. Purchasing power parity. Parity. When we come to this number 3, the essence of this number 3 is for you to know whether an asset is overvalued or is undervalued. Okay, we will come to that. Let's start with first one. It is the combination of these three. When you put these three together and you analyze a pair based on these three different ways, whatever result you get will tell you whether that asset is good for sell or is good for buy or is good for you to stay clear of the asset. Do you get now? So now, first, carry trade. What do you mean by carry trade? Carry trade is just essentially making use of, the differentials in the exchange rate of your assets. You want to use the differential in exchange rate of their assets. You don't want to trade assets that have almost zero difference in its interest rate. For instance, GBP USD is 3.7 something, and then USD is also has interest rate of 3.7 something. So you want to, as much as possible, try to avoid asset that has a very close interest rate. But you can see that GBP USD is also bearish now. I will tell you the reason. That's when we come to point number 2. That is why GBP will be bearish against the dollar. I will tell you the reason. But let's first focus on carry trade. Now, let's use example of euro dollar, for instance. Euro USD. Okay, the interest rate on euro is 2.2, while the interest rate for USD is what? 3.75. Okay, so if you have opportunity to hold any of these two assets, which one will you hold? You want to hold the one that has a higher interest rate. And in this case, USD has a higher interest rate. So if you want to trade Euro USD based on the method of analysis called carry trade, you want to borrow Euro to buy USD and hold it. If you are selling Euro USD, what you are essentially doing is that you have gone to the bank, using the small money you have in your trading account and making use of leverage opportunity to you have borrowed Euro, which has a low interest rate, to go and buy what? USD with a high interest rate. So the one you have sold is your Euro. The one you are holding is USD. When you are selling Euro USD, you are holding USD. So in as much as Euro continuing to go down, what it means is that the small money you borrow on Euro, you have used it to acquire USD and is now increasing in strength. So what that means is that they are going to pay you in two ways. Number one, they will pay you what is called swap. Swap is the interest rate differential. Every day as USD is increasing in strength, they will continue to pay you the interest on it. That's why if you see your MT4, you will see positive. You are having a positive carry trade because you have chosen wisely. That is number one way they will pay you. You are not noticing it because you are trading 0.01. For those trading 100 lots, 80 lots, you will see their swap in a day can accrue up to like 400, 500, 1,000 US dollar, only swap. That is the interest they will pay on USD. Number two, for USD appreciating, you bought something for you bought something at maybe 1.2, and it has now appreciated to 1.4. So if you are able to acquire 10 here, so 10 times 1.2 is 12. Now 10 times 1.4 is 14. So you have $2 increase. That is another layers of profit you will get when you use the opportunity, when you use the idea of carry trade to now select the pair you want to trade. Do you understand? So each time you want to trade any pair, you get to now go and find out what is the interest rate on the base currency and what is the interest rate on the quote currency. Make sure that you do not buy against a higher interest rate, higher currency with higher interest rate. What am I saying? Do not buy, do not sell a currency with a higher interest rate against the other. For instance, now it's an aberration buying Euro USD. Why do you want to buy Euro USD? It's a very difficult decision right now because number one, your swap every day will be negative. If you are floating at a drawdown of $300, if your swap, they will add it to it, will be 310. If it is $10, they will add it to it because you are on negative. Do you understand what we are saying now? So that is what is called carry trade. So if you want to trade maybe Euro AUD, you need to find out what is the interest rate on Euro, 2.2. What is the interest rate on AUD? 3.7. This is positive. This is stronger. Okay. So it is best to look for what? Selling opportunity for Euro AUD. You can't buy Euro AUD under this situation. If you are buying it, you are doing what we call negative carry trade. Negative carry trade. This swap will be negative on you and they will be adding it on you. You don't do that. So that is the first consideration we do when we want to do fundamental analysis. So based on these two examples, apply it to the rest, okay, or apply it to your peer whenever you want to trade them, okay? Next is yield. We use yield. Yield is more or less like the interest you can get by holding a currency. And that interest you will get by holding that currency, you will get it by, evaluating the 10-year bond of the country that hold or that own that currency. 10-year bond is a small to medium term measure to determine if the yield on the bond of that country is good, then it will reflect on the currency. So you now want to find out, these days we are in the era of artificial intelligence. You can easily ask AI, what is the 10 years bond yield of USD? What is that of Euro? It will tell you. So if the yield of USD is maybe 4%, 10 years bond of USD is 4%, and that of Euro is just 1%. You know, therefore, that holding USD for longer time will give you greater benefit than holding Euro, because USD has US 10 years bond has a greater yield compared to Euro. So this is the second consideration you will use in analyzing your pair. That is the second consideration, the yield. All right. And then the third consideration that you will follow is what we call currency asset valuation. Currency asset valuation. And when we are doing currency asset valuation, or some people call it in literature, you will see currency asset valuation model. Okay. And there are several models that you use to assess the value of a certain currency. Okay. But the major one, which I like, the one I like most, is what is called purchasing power parity. Purchasing power parity. Okay, that's the one I love most among all. I don't even care to look at other. This is the one I love most. Okay, before I explain what purchasing power parity means, you need to understand that the essence of doing currency valuation is to find out whether a currency is undervalued or is overvalued. Whether it is undervalued or overvalued, because you can go and check the interest rate. You can check the interest rate on euro as against AUD. Euro is less, AUD is higher. So which means you're supposed to be selling euro USD. Supposed to be selling euro USD. But what of a situation where euro is already undervalued? Undervalued. If it's already undervalued, if you attempt to sell, sorry, I wanted to say euro AUD. If you attempt to sell euro AUD, you will lose. It will not work. But the question is that, how do you know fundamentally that euro AUD is already undervalued? You use what is called purchasing power parity. And how do you conduct purchasing power parity? Supposing there is a watch called Rolex. Okay, Rolex. This Rolex, you find out in America, how much do they sell Rolex? No, we are considering euro AUD. You go to Australia, how much do they sell Rolex? Let's say it's let's say it's 1.5, Australian dollar. Go to Eurozone, how much do they sell the same Rolex? Maybe is 1.3 euro. So by the time you divide 1.3 euro with 1.5 euro, what do you get? So supposing when you divide it, you get, let's say, can somebody divide it for us? Let's say you get 1.3 divided by 1.5. That is 0.8. You are getting 0.8. 0.8. This is what is called real effective exchange rate. We call it what? Real effective exchange rate. When somebody tells you that he wants to do rare analysis, this is what it means. Go to all those banks, international banks. They do rare analysis on all those instruments that they trade. This is what is called rare analysis, real effective exchange rate. You are not looking at the one that is operating on the system. You are looking at the real one that is happening in the market by comparing the price of identical commodity in the two countries. So when you get the price here, you now go to the MT4 and check the price of euro AUD. If the price of euro AUD there is 0.75, can you see? It then means that the price of euro AUD, which is supposed to be 0.86, is 0.75, which means it is what? Undervalued. It is undervalued. It means that euro AUD is undervalued. And then you are now doing the carry trade analysis, and you are having lower interest rate on euro, higher interest rate on AUD, which means you are supposed to sell euro AUD. But your real analysis, that is real effective exchange rate analysis, is showing that euro AUD is already undervalued. How can you go and continue to sell an undervalued asset just because of interest rate differential? Okay, so in that case, if the structure of euro AUD is already like this, which means you are not going to look for sell opportunity from here. This is where you now have what do you call it? An alignment of technical analysis and fundamental analysis. On the daily time frame, you have to allow this price to go up here. Okay, by the time it goes up here, you now see that it will have attained the real effective exchange rate of 0.86 here. Now it was 0.75 here, which was undervalued. You cannot sell an undervalued asset just because of interest rate differential. So you have to therefore allow it to push up to attain the real and effective exchange rate price. So when it attains that real exchange rate price, which is the real price, then you can now use your what? Your carry trade to now start to look for sell opportunity from here to the downside. Can you now see? So you are not going to use carry trade in isolation, or use yield in isolation, or use purchasing power parity in isolation. You are going to use the three together to form to make an informed opinion about the asset you want to trade. All right. So you go to all these banks that trade Forex. These are the three ways they do their fundamental analysis. And if you notice, for sometimes you just see, I just stay on euro dollar. Anytime you push up, I sell. Anytime you push up, I sell. Anytime you push up, I sell. Why do I do that? Because I know that people that trade Forex, the bank, we are not the one trading Forex. The banks are the people moving it. They are putting money on the sale of euro and buying USD. They have no interest in buying euro against the USD. So if the banks who are doing this business do not have interest in buying euro, why should I buy it? So anytime euro dollar is going up, I leave it. When it has climbed up very well, I sell it again. It's as simple as that. Do you understand the logic now? Okay? So you now need to go and do your research, thorough research. Understand carry trade. Understand yield. That one is simple. Just go to AI. Ask AI, what is the yield 10 years bond of United States government? It will tell you what is the 10 years bond yield on 10 years bond on Canada or Canadian government. It will tell you. So based on this, you can see, oh, the one with higher yield is the one I want to hold. The one with lower yield is the one I want to sell. But then yield should not be the only determinant. You now need to find out, based on the yield, what are the interest rates, the last interest rate released on these two currencies. When you get it, if it tally with the yield, fantastic. The next thing you need to do before you now enter the market is to go and do asset valuation. You need to go and find out whether that asset is undervalued or it is overvalued. If you want to sell it and it is overvalued, fantastic. For instance, let me show you an example of Euro AUD when it was overvalued. Okay, go to Euro AUD. For instance, look at this asset. Right here, it was overvalued. Boom. When it came here and the interest rate was released, the yield on Australian dollar, I'm going to use this as an example. Euro AUD. The yield, if you go and check the yield, ask AI, the yield on 10-year bond on Australian dollar, it is about 4%, for instance. Okay, and the yield on euro is about what? Maybe 1%, for instance. Okay, so which means that based on yield, we have to be selling euro and be holding AUD, meaning that we have to borrow euro and buy Australian dollar because of the higher yield. That's number one. Number two, the interest rate on euro is just 2.2%. And the interest rate on AUD was increased to what? 3.75%. So based on carry trade, we have to be holding AUD and be earning interest on it and be selling off euro, which means that you are borrowing euro to what? To acquire AUD for more interest. So the two align perfectly. The third one is currency asset valuation using what is called real and effective exchange rate, purchasing power parity. If you use it at this level, at this point in time, you will see that this level match an overvalue of what? of euro against the AUD, because you can see it has pushed up. That's an overvalue. It is not right now, it is undervalued, but right here is overvalued. So if it is overvalued, and your carry trade and yield analysis is telling you to sell euro and acquire AUD, then after doing your asset valuation, as a matter of necessity, you must get an overvalued result. So if you get overvalued result, it then means that go and look for structure and sell euro AUD. I can bet it with everything I have, you will make tons of money. Because there are people who do not even look at this technical analysis. From here, they just slam sell. But because you have technical chart before you, you can look at it and then begin to look for structure with which you can sell from. Okay, from here you can begin to now look at structure, because technical analysis give you the idea of the time you should get in. Okay, you get in here, you sell, you make money. Stop loss here, TP down, you make money. Okay, after this impulse correction, you sell because all your analysis is telling you that is down. Okay, look at it. After this you sell. Look at it. Boom, boom, boom. Alternation principle. This one does not retrace up to 75. The next one must come 75. You sell. Why? Because that is the fundamental analysis that you have done. Look at it here. This one, you sell. You have done the fundamental analysis that give you the idea of the direction of the market. So what are you looking for? You sell. Okay, this one come here. I saw it yesterday, but I don't want to trade it. I was looking for peers to use as example. Why I'll be teaching you some of these things. So I was tempted to want to sell. I said no, leave it. You sell and look at it from here. Look at it down. This is how you use fundamental analysis to find direction. You can see that in all these things we have done, we have not mentioned your what do you call it? Your NFP, your Ds. They are just indicators. All of them are indicators that help in determining one thing. And what is that thing? Interest rates. It's just to help us to determine interest rate. Help the central bank to determine interest rate. And once the rate is determined, that is the only single parameter that defines every other thing you find in the market. Your NFP, your CPI, everything, housing, purchasing manager, all is geared towards determining rates in the economy. And once that rate is determined, it affects every other thing. The bond market, the capital market, everything to now begin to affect it. So every fundamental news release you are seeing in your Forex factory, they are all together in order to determine your what? Your interest rate. But the real fundamental analysis we do while analyzing the market are considering the yield, considering the interest rate, and then considering what is called asset valuation model using purchasing power parity. So this is just a summary of the technical analysis, the fundamental analysis we do on any pair before we trade them. All right, so go and do more research and get more into them. Shortly, by God's grace, in the next 2 weeks or 1 month, I'll release the part 2 of fundamental analysis on the course website. Is that okay now? There you can see the detail, but this is just the preamble or general overview of how it is. Any question? We have how many minutes to go? We have 7 minutes to go. Any question?
Hello, sir. Good evening, sir.
Yeah, good evening.
Good evening. So this analysis, does it applicable to gold and mason drives?
Well, partly. partly. This analysis I did for you is particularly useful for currencies. Because gold is also pair. Gold is also pair with what? With USD. So it also affects it in a way. You can use interest rate to determine that of gold, value of gold. If the interest rate is up, if the interest rate is up, you want to hold USD, is that not? And if you want to hold USD, what happened to gold? Gold fall. Okay? Gold falls. But if interest rate on USD falls, what will people do? They will convert their money to what? To gold. And gold will do what? Will rise. Okay? That is how it is. So it's applicable to it. You can use carry trade for gold versus USD. You can use carry trade for it. All right? You can. And the only thing you may not be able to use it for is asset valuation. Okay? Because assets are valued in currencies. They are not valued in gold. So if you are able to get the price in one country, if you use gold to get it, except if you use gold to if equivalent of gold to get it to one currency, you now go and use equivalent of gold in another country, which is not possible because barter system, last time I checked, has been eradicated. We are using currency now. So the means of evaluating currency value is by using currency. And gold is a commodity, it's not a currency. The last time I checked. Do you understand? But the only part of fundamental analysis that will affect or determine gold value is interest rate on USD. That's it. Another question? Are you satisfied with this?
Yeah.
Are you satisfied with this?
Yes, sir.
Good. And remember, there are other fundamentals that control gold. Okay, geopolitics, like war, then global pandemics, global economic meltdown or economic instability. These are factors that directly impact value of gold. Is that okay now? Apart from interest rates, these are other factors that are affected because gold is a safe haven asset. All right. Another question?
Yes, sir.
Okay.
So,
okay, yes, sir. Good
good
evening,
evening,
sir.
Two people are talking.
Okay, good evening, sir.
Yes.
The little that you just said, it's just the tip of the iceberg. So when are we getting the deep teaching about this fundamental that you just show us now?
If you have access to the course page on the website, you will get it there very soon. If you don't have access to the course page on the website, then you can't get it. You cannot get it. And I'm not going to teach more than this. This is the first and the last I will teach in this group as far as this is concerned. If you want more, you go and purchase the course. If you don't have access to it, okay? And then if after studying it from the course, you still want to get details, you go and pay. You go and pay and come. I'll give you the details. Okay? Another question?
All right, sir. Thank you.
Yeah.
Okay, yes, sir.
Yeah.
Sir, if you look at the current location of RSI on daily time frame for EU,
okay,
is hovering around 50.
Okay.
Could that be responsible for why the fall that we're anticipating has not happened? The level of fall that
RSI hovering around 50 just shows that the pair is at equilibrium. You can see where I mark. I don't know if you are seeing my screen.
Yes, I am.
Okay. You can see where I mark on euro dollar. So up till now, on Monday, it got here. We sold. Okay. Yesterday, it got here. We sold. Now, it's trying to climb up again. Okay. So, but all we know, each time it push up, we will sell. That's the only thing we have with the only deal we have with euro dollar right now. Though the structure it gave us here is a structure that should mean that this should come down and then will go up again. That is the structure. This is a sorry, I'm in a session. Just give me 10 minutes. 10 minutes. All right. So this is a structure. This should push down. Maybe by the time it clear all this liquidity, it should push down. And after pushing down, it's already developing all this liquidity right here. Should push down right here, go back up. Okay. We have to go back up. We have to go back up, probably push up here, break this top from here, then push down, final fall. This is the expectation. This is what I expect euro dollar to do. This move to the downside is still going to come. I'm still very sure of it. It's going to come. And then, but once it drops to the downside, I expect it to go back up before any push down will happen. All right. So, because intermittently you will see when it is undervalued, you need to push up. Any currency that is undervalued, we have to push up. Though we need, based on our analysis, we need to sell it. But once it is undervalued, it will push up. Once it push up, we join the sell again. So that's how it is. All right. Another question? Another question? Okay. So I'm going to send the recording to the group for your consumption. All right. So enjoy your weekend, everybody. And I hope you enjoy the session. I hope you enjoy the session.
Yeah.
Yeah, correct.
Yes.
Yes, sir.